Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight is go through the latest technical report by Jamie Setley at dailyfx.com. So let's go ahead and pull up that report. And if we go to the synopsis on top and read that, consolidation since last Friday may mark the beginning of a larger reversal. Pairs such as the euro dollar, pound dollar, Aussie dollar, and Kiwi could be building bullish bases. So let's scroll down to the euro dollar. The ABC count remains preferred. If you recall on the last report, which is located on the post directly above this one, we spoke about how the C correction could be underway. I'll focus more on that once we pull up the charts. And then also the dollar yen remaining below 103.10 keeps a longer term bearish count intact, in which the dollar yen will accelerate lower and drop below 95.72. So let's go ahead and pull up the charts. As I just mentioned before, the first chart I'm going to focus on is the euro dollar. And if you recall on the last report, I mentioned that Jamie said that the 34.85 low had been taken out. That eliminates the most bullish count, but the pair, as Jamie mentioned, is probably in a correction here, a simple ABC correction, and the C wave could carry to the 140 area, at least above this high over here, around 138 or so. And what I mentioned in last report, which again is located directly above this one, is to draw a simple support line, and we can see that prices have stayed above this support line. I believe prices were right here during last report, so we can see prices are respecting that trend line and maybe a possible entry for a few more aggressive traders out there, but prices still have not touched that support line where the good risk-reward trade will be. So that's what I would keep an eye on moving forward, and certainly keep your eye on Jamie's reports as well to see if there are any changes in conditions. The next chart is the dollar yen, and again, as Jamie mentioned, that 103.10 high, that's the high of this candle wick right here, and I can change the format of the chart so you can get a better view of that. That would be this high right here, 103.10 area, and if we go back to the candlesticks here, we could see again that the 103, I remember I called it the 102.80 to the 103.50 area, should be a good area of resistance moving forward. We can see this is a clear daily breakout, and we can see that prices prices came back up on the opposite side, and the support once broken did act as resistance in the future, so we should maintain a bearish bias against that 103.10 high. Personally, I think prices might rise slightly above that high, maybe eliminating the most bearish count, at least in the short term, because Jamie is very bearish longer term with the dollar yen, but that could give us a good risk-reward entry anywhere, I would say anywhere near that 103 figure if you can get an entry on the short side, placing your stop maybe 100 pips or so above that point. And again, this is a very long-term trade, so we might wait until 5 p.m., until that daily candle closes for that extra confirmation. Of course, we might have to place a wider stop, but again, because it's a longer-term trade, the reward will be great. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.